The following is a presentation of TFNN. The Global Market Pulse with your host, John Logan. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, John Logan.
Hi, guys. Welcome back to the show. Hope you guys are having a great Tuesday morning. I have to check my watch to see what day it is. Just kidding. The day after Monday, the day after the weekend where, man, Brexit. Big impact, but we're going to try to dissect what's the fallout now, especially after yesterday. You know, I heard somebody on CNBC. I rarely listen to the show. Try to stay away from it. Try to stay on TFNN all day long. But guy yesterday was telling people, well, you know, if you've had some gains in some utility stocks, you may want to take them and then dump that money into some of the stocks that have pulled back. So in essence, he's basically saying, take your hedges off. The sell-off is over, and double down on some things that went against you. So that's just incredibly bad news for anybody who's an investor. Those hedges and that utility sector are there for a reason. Even if they come off, you know, the thirst for yield situation with a group like that may not be over. It may be. But again, you've got a balancing act with your portfolio. When you dismantle hedges like that, I can't believe, I don't know how someone with that type of knowledge can get on TV and tell people certain things like that. And those people are actually going to do things in their portfolio based on listening to CNBC. It was kind of criminal, in my opinion. So, but going to the XLU sector, I just want to speak about this in particular. You know, market goes up a little bit. 10 years coming off slightly. I wouldn't call this even a pullback at this stage. We're trading 133 on the 10-year. And looking at the XLU in general, it looks like we've got a print this morning, and we are not selling off at all. And what does that tell you? For the most part, the thirst for yield is still there. And the XLU, as we've looked at it on the weekly, just sticking this to this point, 49.88, let's just call it 50's big support on this. I know this is, you know, not the exciting world to stay in of stocks. Boring is good sometimes. And if you'll notice, we've talked about this sector. We've talked about, you know, the reasons to stay in this sector. And I don't see a lot of reasons to get out of it, especially as far as a hedge technique when you look at your portfolio. Looking through the den here. And Terry, if you're going to Asheville, Boone, Blowing Rock a couple of weeks, man, you're lucky. That is a great area. I was just up there a couple of weeks ago, actually 2 weeks ago. And I work for the tourism board of the North Carolina mountains on the side. Here we go. Here's a 10-year. We had some trades on yesterday, and I took a little bit of risk here, took off the 10-year trade and was waiting for a pullback. These are the 240 levels here. 132.31, let's just call it 133, is 240 support on the 10-year. We caught this move, if you've been watching this show, getting back this close that happened right at 132.10.11 the other day. Friday, in fact, we talked about that being support, caught that. Then I'm letting the 240 regulate the trade up. And as we look at this, you know, I thought we'd probably explore this whole fair auction. This is a little more short term than what we normally talk about on this show. But I took some off around 133.14. I'm looking to actually buy this again, 132.31. I want to point out why. Looking at the S&Ps, when you get a market that opens up in a kind of a downtrend that we've had, you usually find sellers. I think we're probably going to edge up a little bit more this morning possibly, and then that 10-year might hit that 240 support. Again, this is a short-term trade. Don't have anything really to hang on to down here on the S&Ps. I'm showing the S&Ps right now. Here's the resistance 2014. If you're looking to short this again, that's where you're going to have to wait for and then orient your stops based on your appetite for risk above that section. And again, I'm using profiles pretty much to dictate, we've had the breakdown, and on the weekly, this is our weekly chart. We've had the breakdown. This is our big breakdown point, 2033, without question. And here's our daily. So there's nothing to hang on to here. And the only thing you've got, since we've kind of changed mode, closed below that weekly profile, you've got a chance to retrace back up into kind of turn the rents the same way on the short side. Not sell things in the hole, sell breakdowns, and sell retracements back up into major inflection points. And Jay, you're right about that. Virginia, similar situation. But North Carolina, the population of the state's doubled in the last 15 years. And I've really forgotten how nice it is to be in this state. It's a great place. If you've never been here, you ought to check it out. Some of the coastal areas, I know Jay will probably validate this, still not populated. You can kind of stand on the beach, look both ways, and not see a house, especially on the sound side. That Bath, Bellhaven, Oriental. Look on the map. It's a very cool scene down there. And by the way, the shark, I'm going to take this down because we've had 2 attacks now in the last week, shark attacks on the coast of North Carolina. That's the downside. So maybe we need to take this down. Here we go. Let's take a look at the dollar really quick. Got some people hitting me this morning. All right. So as we look at the dollar, I don't think the currency, these volatilities in currencies are usually a predicate of some sea change events in the markets in general. We've been talking about that. But, the dollar safety play, you've got big support around 95.76 on this. These are our profiles. This is all in the scanner. If I go into the scanner, I'll see the same things. I go into the futures section. All right, so let's go down to the dollar, and there's the dollar index on the scanner. There's that big top of the box, 95.76 that we just spoke of. And got some red shoots here, but again, you're kind of waiting for these major inflection points to be hit to back the truck up on the long side again when it comes to the dollar. The reason we're still shorting resistance points is, this weekly and daily, if you go to TAS says up here in the scanner, you've got a little automated real-time research report when it comes to the index itself sitting here. And I hear the music. We'll be right back, folks, to continue this conversation.
TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile-based scanner in the industry. Powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. John takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Trying to get the shark back. It was lurching out at me. I don't know if you saw that. Anyway, let's take a look at the crude situation. All right, so this yesterday when the crude market started to close, we had a little bit of a market on close order buy scene that started happening. I had an order in literally, and I want to show you this. This was disturbing, to say the least. I had an order in at 45.72. I think we hit 45.70.81. This is where I got penny wise and pound foolish. Missed the trade altogether off these weekly unfurlows. Remember, folks, if you'll notice, you see that, you see this. These inflection points are extremely powerful. When we're in an uptrend, and again, we'll go into the scanner. I want to show you something here. The way this algorithm works, and I was looking at the ETF profile heat grid, looking at all the internals while ago on the break, and just looking at the XLU in general. Interesting little situation there. If we go into the crude situation, that arrow up and even being gray, that means we're in a balanced area and we're in an uptrend. All things considered, that means that we're supposed to be buying support, especially on the long term, waiting patiently. That 45.66 that you see there, again, we got that, I think 45.81 or 82, something like that. I had an order a little bit above that 66 at 72, and lo and behold, what are we up? Let's see. I'll give you a print here. Okay, so we're up $1.50 approx. No, we're up more than that. Jesus. Almost $2 in one session. Now what do you do? In my opinion, on crude, that big trade and that trading bounce has happened. You're coming up into some resistance. This was the targets actually that I had. I had a market if touched order around there, and then I had some OCO orders, wings. I guess they call them OSO orders when you put on the, what if filled, then put the wings on. Those are the targets. Again, the market getting kind of happy, being the equities market is just kind of elevating oil a little bit, and some of the clarity that seemingly all of a sudden is now happening out of Great Britain. I don't understand that. I think, again, what we're looking at here is crude reaching those inflection points. It's not a sell point. It's just you've reached the targets because of that long-term balanced area view. And then on the S&Ps, you've got 2014 sitting here. So you've got a little bit more of a move up, possibly going to be happening today. But 2014 is going to be, in my opinion, the turn to rinse the same way again on the sell side. We talked about the 10-year. We talked about the dollar. And we're going to take a look at gold really quick. I've omitted that. God. Here we go. All right, so, what do you do with gold? I've been a big fan of not shorting gold and, again, trying to buy inflection points. Your big inflection point, believe it or not, at this stage is going to be around, there's 1296 on the unfair lows on the 240. There's 1297 on the unfair highs on the daily. So if we go into the scanner and we go to our futures section and we look at gold, which is right there, as you can see, we're going to go to our multi-time frame view here. There's the 1296. There's the 1296, 97, rounded off. That's where you're going to be patiently waiting as a support area. And, you might be going, well, God, I'm already long the thing. Do I have to suffer through another $20 an ounce on the downside to double down on it? Well, this is kind of what's just like the 10-year trade where I was, before talking about taking some weight off the unfair highs on the 240. That was really where your kind of leg out situation is. On the long-term view, if you're looking at gold on an ultra long-term view, I think you're still very okay. But we could be in order for a pullback down into 1296, 1297. And then you've got Big Mama sitting here at 1286, the big-time support on gold. But again, I think, you got to just sit tight on gold. There's nothing to really lean against here. Even though we've got a big wide profile, you got a POC, the top of the mountain on the balanced areas at 1307. It bounced off of there. What is this? To the tick almost this morning. But again, I think the larger view here is we're kind of in an area where we could just kind of churn around. Remember, this is the fair auction. This is where stocks are so-called balanced, and we're really right in the middle of it on the mean level. On the mode level, we hit that level and bounced up. But again, the markets are probably going to edge a little bit higher here. 2014 on the S&Ps, that could cause gold to just kind of flail around here a little bit and not have a lot of direction. So I think this is a wait and see. And it took me, I timed it. It took me 3 minutes to actually come up to the conclusion of wait and see. So how's that work for you? Nobody cares. Let's take a look at the Shanghai. All right, so again, something that's just kind of disconnected from the rest of the world lately, the Shanghai. Here's where we're at. Just weekly, daily, right in the middle of inflection points, just nothing to nothing is really here to write home about. And there's no leverage. There's nothing to play defense against. There's not a lot of upside right now. You're gonna have to wait for breakouts on this scene. And breakouts above 3056 would be what I would consider a valid breakout in a weekly close above there. That's just technically not on the horizon. I'll put it that way. All right, let's take a look at something I've been following. December corn. Just to hit a couple of grains here before the next break. Here's that long-term view on December corn. We closed below, and then we had just a super massive wide. Every time I say super massive, I want to say black hole. But we had a super massive profile up here. We closed below. We had the new profile. We had the new support, 3090. These are all in the scanner. We reached the low this week of 3091. This is why the wait, be patient, wait and see attitude works, because, again, this is all about risk-reward, high ratios when it comes to risk-reward. and being able to play defense. And the only way you can play defense is if you can have a fence to lean against, basically. And you guys know that. We talk about it every morning. So when you have these, and again, you're going, wow, why didn't you tell us about this yesterday? Actually, we had a lot of currency things going on yesterday or on Friday. Didn't have a chance to do that. But we had that weekly profile appear. And now what do? All right, now 408, 407, 408, this daily unfair low here, that is coupled with the previous unfair high on the weekly. And I know you're going, wow, if you throw around so many numbers, you can't be wrong. We're going to finish up with corn when we come back, folks.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
Today, many commodities are trading at relative lows. And now you can take advantage with Everbank's new limited time, 5-year, market-safe currency comeback CD. This indexed and U.S. dollar-denominated CD offers 100% principal protection and is based on the equally rated performance of currencies of Australia, Canada, Chile, Mexico, and South Africa. These 5 countries are especially rich in commodities, and their respective currencies are poised to do well should commodity prices begin to recover. Keep in mind that no APY, or periodic rate of interest, is paid on the CD. Don't miss out on this innovative new financial opportunity. CDs must be opened and funded by the upcoming July 14th deadline. To apply online and learn more about the CD, including product terms and disclosures, visit everbank.com/TFNN now. This advertisement is sponsored content. Everbank is a member FDIC.
Until recently, it was almost impossible for the average investor to hedge against currency risk in Europe or Japan. For a bold trade on Europe or Japan that protects against moves in currency, trade HEGE or HEGJ, 2 times currency hedged leveraged ETFs from Direction Investments. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC.
This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Hi guys, welcome back to the show. Finishing up with December corn here, 408, 407, that general area. It's going to be, we kind of broke down, retraced back up to a big area that was extremely important. Where we closed, I think when the July contract was doing limit down, that's where we ended up. So we've reached it. We reached a high of 407, rounded off, and right now, that's your bounce on corn, and I think now we're just going to churn around. So the trading opportunity around that 390, 20-cent run up that's happened. Now we're just going to probably consolidate here, and then we'll have to wait for another breakout or breakdown. New crop beans, voila. All right. So new profile this week, bounced right off the top of the mountain, the POC, in a very wide profile. Again, these are things you can play defense against, and your target's up top, ultimately 1148. And right now, what do you do with it? I think, in my opinion, with the breakdown that's happened on the shorter term, I think we're still going to probably run up a little bit more on beans. And 1148 is your takeout point here. I'm not a big fan of shorting beans. We've talked about that. We're looking for buy points all the time. This 1130, I tried it around there. Again, took the hit. That's what you got to do in trading and keep moving forward. You got to be able to take your ball home and come back the next day and play. So you never want to, you want to take opportunities when they're here. You want to use the inflection points, but you also want to not be piled into anything. I cannot see. I don't know what happened there. When you're doing any trades. All right, so we've hit all the usual suspects. I want to take a look at a couple of stocks. We've got consumer confidence at 10 a.m., by the way, and I see now they're, oh God, they're dusting off the bulls. They're bringing the Mario Gabellis and a couple other people out from the woodwork now. Now that we pulled back a massive 5% off all-time highs, we've got to dust the old timers off and tell everybody it's going to be okay. Tesla. All right, we're very bearish on this. Yesterday afternoon had a pretty significant rally. We talked about, is there any leverage to trade this? Any way to play defense here? This is the 240 yesterday afternoon, and we busted back above. This is the new selling point for me on this, 204.44. Market could drag this up a little bit more. I don't think we have any prints this morning. Let me see. Yeah, that does look like today's print, 200. So again, you got to wait for this to go up a little bit more. 204, that's going to be, and I want you to look at these 240s. They're great regulators of the trade down. See that? See the breakdown? Now we're looking for 204.44 as a place to sell this on Tesla. Here's Apple. Okay, this is very cool. Pre-market looks like we're printing already 93.15. So we talked about a trading opportunity waiting for this thing to get down into this number down here, which is 91.76. That happened. We're bouncing this morning. We could have gapped down if the market had gapped down. I think Apple right now, as it bounces up, your targets right now, believe it or not, market could drag this a little bit higher. 93.71. That's the 240 unfair high. Remember, that's the regulator of the trade down. But again, we have reached the major inflection point on the weekly. That's where we talked about the targets were after 98.64. That's happened. Now you got to regroup. Day traders, you got a chance to short this again at around 93.71. You've also got a 60-minute. We don't talk about these a lot at all, ever, but you got a 60-minute unfair high around the same vicinity as that 240, which again, I'm not a big fan of being long Apple in a big way. We could rally up, and that's what stops are for, but I think the writing's on the wall with this one. Okay, here we go. Let's go back to the S&Ps really quick. Again, the breakdown, had a question about this one, the breakdown on the long term and the intermediate, and a lot of the breadth calculations and the statistics, which you can find in the scanner, are pretty much painted on the wall. You're going to have to wait for those to adjust this morning as all the stocks open. Remember, they need to print to start causing some things to change differently in the scanner. 2014-30 is going to be your resistance on this one. And again, I think you got to wait and just let this thing edge up. If you wake up this morning and go, oh, God, I'm going to miss the rally from the bottom after the pullback, I don't think you need to look at it this way. But seemingly, on TV. They're just dusting the bulls off and bringing them out and telling you everything's going to be okay. And the currency repricing things that are going to happen and are going to affect all the numbers in all companies that are doing multinational transactions. They're going to be okay. I want to take a look at Microsoft really quick. All right, so not a lot of stocks escaped some of the sell-off here, and Microsoft, looking at this, hadn't been really the darling of the long world lately, and this weekly broke down after we had it closed last week. So this 5009, I had a couple of emails about this. 5009 is going to be a resistance. If we get any rallies back up in there, we're trading about 49 pre-market here, it looks like. That 50 general area, that neighborhood's going to kind of be a place of wait and see for putting on some shorts there, in my opinion. Again, when we have a breakdown like this, we could, there's been very rare opportunities to be short over the last 7 years. And I'm going to point this out in the scanner. So if we go into the dashboard and we look at our breadth calculations and we go to our weekly breadth crossovers where stocks are trading above or below these calculations, I'm going to kill the middle ground. There's been certain areas where you could be short. They've been very short-lived, and there's certain areas where you could be short or hedge the portfolio, the long portfolio, whatever. We are in long-term imbalanced area towards the south side right now. And that means and that's on both weekly and daily. And again, we got a little bit of rally this morning, but that means you're supposed to be looking to sell resistance points when they're offered, as long as these breadth calculations are still negative. On the shorter term, that's a different story. But we're presented a decent little short-term resistance point on the equities around 2014. And if we edge a little bit higher here, Microsoft may get into that 50 area at the same time. Let's see here. No questions? We're going to take a look at Facebook. I've been following this lately because, and again, we're up 110.43 this morning. Here's the daily. That was another harbinger of bad news up top there, but I think shorting this stock is never in order. So we've got, again, support 103.59 and breakouts above 113.64. And not a lot of inflection points in between. So this is kind of no man's land for Facebook. We'll be right back.
Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Nice one. Man. What a cool movie. That cleared the beach for a couple of years, huh? Okay, we're taking a look at FCX. I had a little question about FCX and support areas, long-term support areas. Obviously, not for the faint of heart. It's a $9, $10 stock that, these are great. I mean, this stock in particular, wow, does it move. These are the types of stocks that you dream of, and I'm going to tell you why you dream of them. For scalping gamma. Now, what does that mean? That means that on a stock like this, you can buy a straddle. And I'd really love for you to, this is actually a great question on FCX. This is, again, we're kind of in a range right now in the long term, which is also cool for this strategy. Buying a straddle, buying puts and calls at the money. I don't know if Thinkorswim, the hour that they do with Kevin Hinks, I don't know if they talk about this strategy, but this is kind of a Chicago strategy right here. A lot of guys in Chicago, they're not directional traders. They look for ways to spread trade, and this is just my opinion, spread trade and try to squeeze juice out of arbitrageable situations. So this scalping gamma trade is buy a straddle, set up your calculators to calculate gamma on a stock like this. Now, for these scalping gamma type scenarios, you really want a stock that's 10, 15, 20 bucks max that moves. It just has a daily volatility that's decent. And what that scalping gamma trade is all about is you're basically putting on a non-directional long scenario like that. And as the stock moves one way or the other, let's say in this case it moves up, you're basically, let's say you got 100 contracts long and short, puts and calls. As the stock moves up, you're kind of scalping gamma. You're shorting stock against the underlying straddle. So basically all you're doing is trying to lock in some profits via this mechanism. Stock comes back, you're taking back some of the shorts. Stock keeps going north, you're shorting more. So basically the worst case scenario is you're going to kind of short stop. In this case, you're short stopping yourself out of the straddle and basically locking in profits, and you're waiting and you're waiting. So when a stock has some volatility like this and it's cheap, that's a really cool, you ought to look that up. We don't talk about that scenario a lot, but it's very, very profitable and riskless, which is what the Chicago guys always want to hear. And if you're thinking about trading somebody else's money, just tell them you're doing riskless trades and only upside, and you'll be in jail pretty quick. All right, here we go. How's that sound? Do not just delete that, Al, from the archives. Just we do a lot of edits on my show after the fact. All right. So we're going to take a look at Chipotle. And blocking out. Here we go. All right. So again, the home of botulism. Here we go. Take a look at Chipotle here. That last breakdown below 428. I mean, again, stocks on their lows don't have to be considered on sale. The good news about this one on the short side, by the way, is we broke these recent lows, not in addition to breaking below profiles again. We broke these recent lows, and we're just spinning around, consolidating, and not wanting to reverse. And if you listen to Basil and Larry and Steve Rhodes and the rest of them on TFNN, Larry, incredible hosts, they'll talk about these kind of flags, pennants, classical technical analysis setups, and this is kind of double in your favor, in my opinion. But how do you play defense on this one? We're trading 393, 394 pre-market. We've kind of bounced up above this profile. We closed below yesterday. Again, if your appetite for risk is, this is a high-priced stock, obviously. You want to trade these things lighter. But this is kind of how we use the inflection point. So if we get back in the balanced area, you're kind of sitting tight. Your resistance area is around 409.69 and breakdowns again below 391. But the long-term action on this is again drilling down into the regulator of the trade down. Your long-term action on this, I still love it on the short side. Just personal experience. When I see a Chipotle, when I ride by them, I think of the salad. I think of the diseases. It still kind of restricts me from going in one. But it's good advertising. I at least think about them in a deeper sense. All right. And we're going to take a look at coffee in just a second. IBM. Pre-market looks like we're trading 145. This was one. And again, we talked about this crowding up here. And then we had the news, obviously. Now we're in breakdown mode. So retracement back up into 146.26 on IBM. I think, we probably got a chance to short this one too. Stops above. Had a couple of emails about that one. Somebody I know said when they see Chipotle, they step on the accelerator. Put a little bit more pressure on the accelerator. Here we go. And Ralph's. Yeah. Jay, thank you. Thanks for bringing that up. If you never listened to the show before, Ralph's is the enabler of appendix surgery. That's from what, last September, Jay? No, October? Here we go. Coffee. KC U6. KC U6. Here we go. Those were the good old days for who? Almost died, Jay. Thank you. Thanks for the concern. Here we go. All right, coffee. So here's the September contract. We obviously broke out. We got a new profile trying to appear here. But again, the technical action, the flag pennant situation, the classicals, and from a classical sense, looks kind of good for continuation. But right now, since we've got a new profile attempting to appear, we're trading 140.50 this morning. I'd still wait and see on this to try to get some areas to play defense. I think if you caught this move on a long term, that's great. I think you should stay in it based on a long term type view. But on the short term, trying to find a trigger to get into this thing, my expert analysis sometimes leads to sit on your hands. I think this is kind of one of those situations. That actually happened on the plane, Terry, the appendicitis suck. We won't cover that when we come back. We'll get to another topic here. We'll be right back, guys.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Hi, I'm Steve Rhodes, host of the Trader's Edge heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartleys, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi guys, welcome back to the show. Yeah, interesting thought there about the shark repellent again. Always gets me thinking. We could develop the shark repellent, not non-GMO but GMO grits. I'll buy an old tanker, fill it up with chum, poke some holes in it, drive up and down the East Coast, and I think we got something there. We'll create shark attacks. Just kidding. Here we go. Let's fall back on oil for just a second here. Again, had a couple of questions about this. We're getting right into that 47.58 this morning. Continue to rise. Oil obviously long-term trading from the long side, but I think you got to take some weight off here and just kind of be in a wait-and-see mode. The market could elevate a little bit. Just to do a kind of a recap here at the end. 2014-30 unfair highs on the 240s as far as the S&Ps go. That's going to be your kind of bounce target. And in my opinion, you got a shorting opportunity there. The 10-year got to pull back to that 132.30, 31 area on that one. If you're day trading there, that's going to be a little bit of a bounce point, in my opinion. That really coincides possibly with that little bit of an inverse relationship with the S&Ps reaching their targets. Gold, again, recaps here. nothing to hang on to here. I think this is a no trade right now. You got big support ultimately around 1300, 1296, that general area. Whole numbers combined with 2 inflection points around 1296, 1297. I'm not breathing deep enough to actually finish my sentences. Here we go. We looked at coffee. We're going to take a look at something else here really quick. We're going to take a look at Netflix and Amazon. Netflix, you know, we've been, listen, trading 87.50 this morning, up about, sympathetically 2 points with the market. Here's the big mama level on this. This was the cracks in the armor beforehand. 88.35 resistance on this. That's the close below retest area. And we're almost back up into that area, 88.35. Check something here. All right. Take a look at Amazon really quick. All right, so, wow. First time in history we reached support on Amazon. And this is one obviously in an uptrend. Unfair lows, 678. We've reached 682 and bounced a little bit here. Remember, on these long-term inflection points, you got to give yourself a little bit of, a landing area with the noise factor to look at these things. That's your defense here on the long side on Amazon. Not a big fan of shorting this one either. And looking at currencies really quick, the euro, I hate this product. It's, we're looking for resistance areas on the euro. Next stop up, 111.408. We almost reached it this morning, but again, I think you got to wait and see. You got to have a chance to play defense on the short side on this one. British pound, a little bit of a relief pop here, and now we're getting above 240s. This thing, there's really no long-term inflection points on the horizon here. You got to wait and see, I think, on the British pound, although you do have some short-term support, 133.46 on the British pound. Guys, thanks. Stay tuned for Larry. Stay out of the water. Talk to you tomorrow.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
This is TFNN.